different view. India remains one of our favorite investment destinations. That was the word we got from Brian Jacobsen of Wells Fargo Funds Mgmt. Speaking to us, he also said that demonetization has changed a lot in India. Let's hear out what he has to say and what his favorite sectors are.
India still remains one of my favorite areas to invest, not just in the emerging markets, but even just in the global markets. Everybody is hotly waiting for the budget to be unveiled on February 1st. I think that there's some expectation that we're going to see a little bit of maybe some subsidy or tax cuts for the working class individuals who were hit hard by the recent demonetization program. So we'll have to see what some of the details are as far as what it is that Prime Minister Modi is going to do to try to rekindle some of the economic enthusiasm that may have been dampened a little bit as a result of demonetization.
Okay, well, you're right that expectations are running high, but what would your idea be of what the budget ought to do? Should it go the consumption way and cut taxes at the lowest level so people spend? Should it do some kind of an income transfer for the economically deprived? Or should it go big on investment?
Yes, I actually unfortunately think that they need to sort of take an all-hands-on-deck sort of approach here, meaning that it has to do a little bit of all of it. It has to be not only cuts in taxes for consumption as a result of the slowdown that resulted as a result of demonetization, also some income transfers for those most poorly off in the society, but still make room for investment. So in a way, unfortunately, Prime Minister Modi has to give the best of all possible worlds to investors and to the country. I think that it's actually somewhat encouraging that with demonetization, it's likely that they'll have increased revenue in order to actually meet some of these objectives. But if they don't have an eye on the near term to prop up consumption and do transfers to the poor and keep another eye on the long term to make those long-term investments, this budget might be viewed as a failure if it doesn't accomplish all of those goals.
Okay, that's a fairly high standard, but standards are demanding in India at this point in time. Well, what if he were to renege on the fiscal deficit timetable? The fiscal deficit target for the current year underway was 3.5%, and looks like the government will meet that. Next year, for FY18, it's expected that they have to bring it down to whatever 3% or 3.2%. If he didn't, would you take that badly?
I personally would not, only because almost everything is sort of changing in India as a result of demonetization. Also, we have to keep an eye on what's going on with trade policy globally. That if they back away a little bit from some of the fiscal prudence in lowering the deficit, I think that people might give them a little bit of a pass, provided that part of the reason why they're missing is because there is that long-term investment for growth, and that there is a longer-term plan to get the deficit under control. A 3.5% fiscal deficit isn't the greatest thing, but it's also not the end of the world when it comes to budget deficits across global economies here. So if he has to back away from that a little bit, I think that investors might give him a pass.
But would you buy India debt in that case? Assuming the fiscal deficit is at 3.5%, there would be more bonds out there from the market, from the government. Will you back India bonds? Is it likely that market rates or yields go up?
I think that we would see yields move up, and as a result, I would shy away from the debt. However, if you think about the Reserve Bank of India, they just recently announced that they were going to be purchasing some of those perpetual bonds that were outstanding. I think the coupon on there was around 9.4%. So I think there is the possibility that they could do some refinancing of some of the debt. But my personal preference is to look at equities as opposed to the debt. And it's not just in India. It's actually across all emerging markets, mainly because this is outside of India's control. I think that globally, yields are just going to slowly march higher here for the next year or two.
Well, actually, that's a good point at which I can ask you about the financial ambience as well. The last quarter of 2016 did see this long DM and short EM trade. Is it turning with the DXY, the dollar index, now dipping towards 100? Do you think that trade is over, or has it only taken a breather?
I think that it has taken a little bit of a breather here. It's possible that the U.S. dollar is going to continue to trade a little bit stronger for the balance of the year. I don't see a lot of downside for the value of the U.S. dollar. However, the going long developed markets and going short emerging markets, I do think that that has turned. And it's not simply because it's a strong dollar versus weak dollar story. It's a strong growth versus a weak global growth story. And the evidence, I think, is building that emerging markets, their growth is beginning to accelerate. Obviously, you have a little bit of an exception as far as in the fourth quarter with demonetization and the hit that that's going to have on the Indian economy. But I think they'll bounce back pretty handsomely from that. A lot of the policies being pursued in many emerging markets and even in the United States should further economic growth and I think build economic momentum as the year goes on.